Nvidia stock is up 82% year to date, and companies are spending billions building up their AI capability. But what does this all mean for you, and how can you position yourself to benefit from it as a retail investor? By the end of this video, you'll know where to invest your money and why. You'll also see that you can get exposure to the AI boom without taking absurd amounts of risk because the industry is highly concentrated, with just a few dominant players who are only going to get stronger. But please do your own research before investing anywhere. The first area is cloud. You should definitely have investments or exposure to the cloud industry already, and they're going to be massive winners from AI, all the while taking relatively little amount of risk. They take a cut every time somebody asks ChatGPT for anything, or every time you watch Netflix. Let me explain that a little bit more. The cloud business itself is an absolute goldmine. It's worth spending just a few minutes breaking down why it's such a fantastic business. This is the way it works. Everything you access on the internet, like Netflix or YouTube, needs to live somewhere. Whenever your device loads a website, it's reaching out to a data center somewhere to load it. Back in the day, if you were a company, you would need to own and operate huge and expensive data centers just so you can put things on the internet. Then cloud came along. Big technology companies realized that they could start to build these data centers and then just rent it out to everybody else. This was immensely valuable. It meant that you don't need to own or operate a chunky building anymore. You could just borrow compute power from somebody who's willing to lend it to you. For these cloud businesses, they would need to spend big money when building data centers, but then they would have an asset that they could basically rent out forever. Plus, it's very high margin revenue. All companies have slowly begun switching to the cloud, with the industry set to grow at double-digit pace. This is before we even consider AI. So before I get into why this is a lucrative area to invest, it's important to give you an overview of what we're seeing today. And there are just 5 key things that you need to know. The cloud industry is highly concentrated and dominated by just a few players. This is due to very high barriers to entry. It can be really expensive to build these data centers. The same big cloud companies are also one of the biggest spenders when it comes to acquiring Nvidia GPUs or AI hardware. And this hardware is something you need to basically make AI work. Their intention is to rent out that power and use it for themselves. Training AI models requires a lot of compute power, and I mean a lot. The amount of power you need is also doubling. We're also in a phase of AI development where bigger models are generally considered better. So the more parameters your model is trained on, the better the model is considered, and the more compute power it actually requires. Both startups that will offer cutting-edge AI technology in the future and big companies that are very technologically mature are likely already customers of one or multiple of these big cloud companies. And the last thing is that all of these large cloud companies are also major diversified tech players. They control access to massive compute power through their data centers and also have an incredible amount of proprietary data. And some of the biggest companies are also developing their own GPUs to compete head-on with the likes of Nvidia. Given these 5 things, what does that imply about the future? The obvious implication here is that these cloud providers will grow incredibly wealthy over time. Anyone who wants to build large or small AI models will likely need to rent power from them, but they'll be renting power twice. Once when they actually train the model, and again when the model is used in the real world. This is why a cloud company earns money every time someone asks ChatGPT for something. Plus remember, as models get bigger and need more compute, it will only lead to more rent money for these cloud companies. We're already seeing double-digit growth in the industry just from companies wanting to switch over to the cloud. And once more companies start adopting AI applications, their compute usage will go absolutely off the wall. So cloud companies will actually see a dual channel of growth, where existing customers will spend a lot more money with them due to the demands of AI, and then new companies which are going to continue to sign up for cloud services. The other important thing to know is that these hyperscalers don't just have a dominant position in cornering compute power, but they also have a lot of data. This means that they will be able to train and deploy arguably more powerful AI models than any of their competitors, also making them a whole lot more money. From my own personal read of the market, this is not a winner-take-all situation, so you can pretty much pick the one that you think will work best. But I do think 1 or 2 cloud providers will pull ahead of the competition. So cloud is a great way for you to get exposure to the growth in AI. But this has been a very positive story so far. I'd like to point out that all of this hinges on one big assumption, and you really should keep that in mind before you make any investments. The assumption is that all of this infrastructure is actually used. Almost all of the spend you're seeing in the market today, including Nvidia's boom, is because we're laying the groundwork. The value will be realized once people start using this hardware for practical use cases in the real world. And what that means is, once you as a consumer or businesses start seeing real AI models add value to their lives. But remember, this is a new piece of technology, so it can take years for this to be rolled out at scale. The other thing that can go wrong is strong regulation in the cloud industry. Currently, you need absurd amounts of money to ever compete with any of these cloud service providers. And this is only going to get worse as they continue to build out their AI infrastructure. This could mean that the government intervenes with concerns of an oligopoly. And while the cloud industry is dominated by a few players, there's another part of the AI world which is basically a monopoly. There are two specific companies which are miles ahead of any competition and are relatively diversified. Before we get to those, please do consider subscribing though, as it genuinely helps the channel out a lot. Thinking about it as an investor, you know what's even better than controlling all of the compute power needed for AI? Controlling the entire production process needed to produce any GPUs or any advanced chips. It's incredibly complicated to produce and manufacture an advanced chip. The best article I've ever read on this is a visual story produced by the Financial Times. Some of the parts used in the process are small. How small do you think these parts actually are? Here's a demonstration. Yeah, they are that small. These transistors are then put onto a chip which then powers everything. And I don't just mean artificial intelligence, I mean literally everything. And how many transistors do you think fit into one integrated circuit? Well, in 1975, that number was 2,000. And now that number is trillions. It's trillions. So we've come a long way and we have a long way yet to go. But as you can imagine, trying to fit these super small transistors, a trillion of them, into one chip cannot be super simple, and it isn't at all. Manufacturing these advanced chips have been a mix of art and science for the longest time. You need to have an extreme amount of specialist knowledge to manufacture these chips and require prohibitively expensive equipment. That's why Nvidia, AMD, or even Apple don't manufacture their own chips. And that is where Taiwan comes in. There's a company in Taiwan whose total energy usage is literally equal to the energy use of the entirety of Taipei. And of course, we're talking about TSMC, or Taiwan Semiconductor Manufacturing Company, my favorite business of all time. TSMC is basically a monopoly in the most lucrative market of the modern age, making it an incredible investment. They're the only ones that can produce state-of-the-art chips. Remember, that's different from your Nvidias or AMDs. These companies just design the chips. TSMC is the only one in the world that can make them. There are other foundries in the world, but they significantly lag behind TSMC's production capability and expertise. For example, here's a chart by the Financial Times, slightly outdated, but a really good illustration. The NMs you see along the bottom, I won't go into the technical descriptions, but the smaller the NM size, the more powerful the chip. And TSMC is the only foundry in the world with the ability to produce these smaller and more advanced chips at scale. The other companies are perpetually playing catch up and always have been. Now you might be asking a very valid question of why can't a company just build a foundry and compete with TSMC? Well, let me answer that question by the last graph I'm going to use from the Financial Times. It costs billions of dollars to even set up a foundry in the first place. And you might be able to spot a pretty unique trend here. As the chips get smaller in size, the cost to set up a foundry rises exponentially. And this is magical for TSMC because as it continues to innovate and reduce its chip sizes, it only makes it more expensive and more difficult for others to compete. It's the best moat in the history of the corporate world, and it only gets stronger with each cycle of new innovation. And of course, TSMC is the one that's best positioned to innovate in this space as well. So strength leads to strength. They have the best people and have been developing an internal knowledge base since the 1980s. They also have the best relationships with the top companies, which allows them to pour a lot of money into R&D. and the chips they produce are for everything. Here's a list of their top clients. The revenue they get from these customers is also likely to grow as chip production continues to become more advanced and as companies start to grow and adopt AI. TSMC is an investor's dream and my personal favorite business of all time. It's been up 27% year to date. It is also a stock that Warren Buffett himself invested $4.1 billion in, only to sell everything 6 months later. Which brings me to the most important issue with this stock. TSMC is of course based in Taiwan, which is geopolitically complicated, and this is a massive risk you need to be aware of if investing in this company. Semiconductors will become increasingly more important for the world, and the manufacturing process will become increasingly more specialized. They're also a key part of the AI race. Remember the largest contributors to TSMC revenue? A lot of these are Western companies who have been able to lead out on innovation partly because of TSMC's chip advancements. Closing off that loop of innovation to the Western world will seriously slow things down and give China an upper hand. This would of course completely change the identity of TSMC. So, invest at your own risk and all of that. It's still my favorite business of all time though. I mean, just look at those margins. 50% gross margin and a 38% net margin for a very capex heavy, R&D heavy foundry. So we've been talking about how specialized the manufacturing of these advanced modern chips actually is, but the level of specialization goes even deeper than the foundries themselves. TSMC are experts, but they need large and complex machines in order to build these advanced chips, and they don't make those machines themselves. In fact, there's only one company in the world that's able to produce these machines at scale, and that's ASML, a company based in the Netherlands. They're actually the Netherlands' largest company and are also up 30% year to date. ASML's main product is a lithography machine, which looks like this. This is crucial in the process of producing a chip and is the very beginning of what you need to make AI models like ChatGPT work. But even more broadly, it's the beginning of what powers most of your devices. And since ASML is the only company in the world that can do this, they have incredible defensibility. Any competitor would have to start from scratch and play catch-up to years worth of proprietary knowledge that sits within the company. ASML also has north of 15,000 patents worldwide, so it really is an uphill battle. The other advantage is that they're obviously an essential component to make chips, so they'll be selling their products to all fabrications, not just TSMC. Money invested in this space will continue to grow in the future, so we may see various fabrications popping up, but manufacturing lithography machines might be too much complexity for someone trying to break in. You wouldn't think about making the Phillips screwdriver from scratch, you would just use it. And I think those are 3 companies or industries that are really good bets. All of these are picks and shovels that will enable the AI market. And it's always a good idea to buy pickaxes if you think a gold rush is coming. As always, please do your own research. I'll include a set of further reading in the description. Cannot recommend this paper from the AI Institute enough. Thanks so much for watching, and please do subscribe and share as it genuinely does help out the channel.